Good morning and welcome everyone to Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Indian equities are set for a cautious start. RBI policy decision essentially eyed. RBI Monetary Policy Committee is expected to start the meeting to review the monetary policy final outcome on Friday. GIFT Nifty at this point of time is hinting at somewhat muted to cautious start coming in for the Wall Street. US stock, not a good inning there, tumbled on Tuesday as Treasury yields hit their highest levels since 2007. Concerns that the higher interest rates would freeze the housing market and tip the economy into a recession weighed on the sentiment of Indian equity markets too. Remains to be seen, but Asian stocks have hit an 11th-month low. Yen spike stirs essentially intervention talk, a sharp rise in the yen had traders speculating that Japanese authorities stepped into the market. Let's talk about the foreign institutional investors and the queues out there. They've offloaded equities for yet another session to an worth of around 2,034 crore, and DIIs on the other side continue purchasing. 1,361 crore worth of stocks were bought on October 3rd. Now let's understand what do FNOQs suggest. Essentially, FIIs continue to be the net sellers in index futures. They've bottomed the index options, however. The selling trend continues even for stock futures, along with that in the bank Nifty futures. So essentially, if you sum up the trade, it is that the FIIs have been the buyers in Bank Nifty option and Nifty option. They've been sellers across the stock futures. FNO ban, well, it's an October series, not much entry there, but one stock makes it to the list. No surprise for guessing. It is India Bull Housing Finance. In terms of the PCR, well, it remains below that one level. But let's discuss the trade setup, strategies for the day, along with few stock recommendations coming in from Rajesh Palviya, Senior Vice President Research, heads the technical and the derivatives at Access Securities. Morning there, Rajesh. What's the view for the day, strategy that one can look at in the new truncated, perhaps week? How are you looking at it and the strategy both for Nifty as well as Bank Nifty?
Good morning, Nickey. So this is the third week where we are seeing that, Nifty is under pressure. Again, post expiry of September series also, there is no as such a reversal we are seeing in the market. And again, follow-up selling is happening in the market as the global cues is also not supporting for the market. Nifty now slipped below to 20-day, 50-day moving average. That is adding up the bearishness on the near-term setup. Looking at the data for Nifty, there was a short built up in the previous session. Most of the call writers are aggressive at 19,600, 19,700 strike. So that area is likely to act as a major supply zone for any kind of minor pullback in the near term. On the downside, 19,500, 400 are still having major put-based concentration on the weekly as well as on the monthly expiry. So this range is very critical for the market. If at all we hold out this 19,400, 450 mark, and if we see any kind of pullback, then there could be some near-term bottoming out kind of activity we can see in the today's session itself. So yes, due to global cues, we may see a gap down opening, but we are expecting that if at all we don't break below 19,400, then there could be a possibility of pullback action during the day itself, and then Nifty can again attempt to move further higher towards 19,500, 550 zone during the day itself. 19,550 is the important level to watch for the day. If we crosses, then short covering may play out. To play this pullback, we are initiating here call ladder strategy for Nifty. One can buy 19,550 call option at 59 rupees. To reduce the cost, you can sell 19,650 call option, which was closed at around 25 rupees. And you can sell 19,700 call option at 14 rupees. So this is 3-lag strategy where you can reduce your cost to buy 19,550 call option on the long side of trade with the outflow of 20 rupees of your premium. Your risk will start above 19,700 and your maximum risk, if we don't cross above 19,700, your risk is only limit to 20 rupees. So call ladder strategy one can initiate to play for next this for weekly expiry. On the Bank Nifty, the immediate and important support area on the downside is at 44,100. There is a long unwinding activity in the previous session, but looking at the data setup, 44,100, 44,000 are the major important support area in the near term. So if we don't break 44,000 level, then there could be a chances of pullback action in the Bank Nifty also. On the other hand, 44,700, if it crosses, then short covering may play out in Bank Nifty, and then possibly Bank Nifty can show good strength towards 45,000, 45,200. So buy on dips is the strategy. Our stop loss is placed at 44,000 for Bank Nifty to buy in the decline.
Sure. I'll also want to chat about financials. HDFC Bank, where the top recheck has happened. Bajaj Finance, where Q2 business updates have trickled in. Your views essentially on these two stocks and also your top recommendations for the day.
So Bajaj Finance is looking very promising, very strong buying action since last couple of weeks, and looking at the near-term setup, short-term setup, we expect that Bajaj Finance can continue for the more upside. The kind of strength the stock has delivered in last couple of weeks, it clearly showing that this stock may move further higher toward 8,200, 8,250 kind of level in the continuation of this uptrend. So one can hold their long position in Bajaj Finance. Even in the decline, one can add the position with stop loss of 7 at 50. HDFC Bank is continuously showing weakness, and the kind of setup we are observing on the weekly as well as on the monthly chart, it clearly indicating that until the stock not crosses above 1540, 1550 level on a weekly closing basis, there would be a pressure for any kind of minor pullback action. On the other hand, if it breaks below 1500 mark, then possibly HDFC Bank can slide further towards 1470 level also. So weakness is there in the HDFC. 1540, 1550 will decide the reversal pattern for the stock. And my stocks for the day, first stocks that we like at the current juncture, that is on the real estate space. And we expect that, real estate space can do well. DLF is looking very promising. A long build-up was there in previous session. So 560 is the target on the near-term basis. One can buy with stop loss of 525. Second stock from the PSU Bank. PSU Bank is clearly outperforming to banking and financial. And looking at the setup for most of the PSU Bank, we believe that this rally can extend further. We discussed earlier also for the PSU Bank, and Bank of Baroda is looking very promising. And we expect that this rally can extend towards 230, 235. One can buy this stock with stop loss of 212. And the third stock is Sun TV. We are seeing that post September expiry, stock is showing good traction, and looking at the weekly chart now, stock is approaching to its multiple supply zone, and the kind of long built up rollover activity was there for stock. It clearly indicates that this stock can rally in the current series. For near term trading perspective, one can buy with for upside target of 645, 650. Keep your stop loss at 610.
All right, that's the word coming in, but let's actually bring in, let's actually address the market opening just to see pre-open, the trade remains lower. We remains to be seen if we are witnessing the amount of cautiousness coming in for the markets. Well, it is a negative start, just like we anticipated. A bit of drubbing which has come in on the US equities, perhaps on the global market, has also weighed down on the sentiment for Indian equities. Acting no different, down and out in trade with losses to an extent of more than 0.5%, 19,400 mark. Holding on to that level for now. Remains to be seen if the selling pressure drags down the market below that level. What also we need to watch out for is Bank Nifty, especially. There are a couple of updates which have come in from the financials, be it Bajaj Finance, be it HDFC Bank. That is not doing too well now in trade. 0.75% of losses coming in from Bank Nifty. Essentially, the market sentiment, you could say, has been dragged down by the financials. Bajaj Finance, L&T remains to be seen how these are the stocks which are stacking up. Mid cap and the small cap index, just to see how is that trending in terms of the performance. Losses coming through and through even for mid cap index, acting no different right now. Losses to an extent of 0.6% coming in for mid cap index. Let's talk about the small cap index. How is that acting? Well, a bit of loss, acting no difference, no outperformance coming in there. Surrender to selling pressure. Across the board, selling pressure is being witnessed in the early deals for Indian equity markets. So as we speak, IT at this point of time, losses to an extent of 0.6% for the IT basket. And in terms of other sectoral indices, essentially something like a pharma continues to be a drag on the Indian equity markets. And also in terms of the realty, auto, metal index, let's pull that up. A bit of traction perhaps seen by the FMCG counter, but just a flat start with positive buys, so to speak. Let's also talk about the metal and the auto and the realty index. Well, auto right now, it is dragged down. Losses, sharp losses to an extent of 1% out there for auto index. In terms of metal, well, a selling pressure continues to weigh down on this index too. Let's also talk about realty index for that matter. Well, acting no different, 0.75% of loss coming in for that one. Let's actually look at the top gainers and the top losers that we have on the list. Well, Nestle India, Adani Enterprises, HUL. These are some of the top gainers that we have right now in trade. Also, development coming in for Adani group of companies. We're going to be addressing that in just a jiffy. Maruti Suzuki, NTPC and Bajaj Finserv. These are some of the top losers. Can we also look at other losers that we have? M&M, Tata Steel and Hindalco. Essentially metal and auto names which have dragged down the index lower. Let's also look at essentially the selling pressure has taken off the market, clearly surrendered to markets at this point of time. But what remains important is that Nifty is right now holding about that 19,400 mark. That is something which is crucial and remains to be noticed. But let's also go back to Rajesh and check with him. What does he make out of this open? And does he feel that 19,400 mark is acting as a strong resistance level coming in for the markets? Or he thinks perhaps surrender, selling pressure could accentuate going forward in trade and markets could test that level more or less?
So, Nickey, opening reaction is in line with the global cues, and I think the 19,400, almost we are trading near to those levels. That is the major put-based concentration below 19,500. So, if next 10-15 minutes is very crucial for the market, if we slip below further 19,400, then maybe unwinding trade may take place, and then follow-up selling can be there in the market. But for next 15 minutes, we will closely monitor this 19,400, whether we hold or not. If we hold, then there is a possibility of pullback action from the current level, and then Nifty can again attempt to move a 19,500 level. As the put base is still intact for 19,400, there is no as such significant unwinding is taking place in first 5 minutes of trade. So we'll wait another 10-15 minutes to watch this 19,400 to initiate further, new strategy for the market.
All right, market breadth at this point of time is completely weak. 45 stocks advancing versus 5 declines. So clearly in the favor of losers. But what I'd like to address first, while Rajesh is on the sidelines with us, Bajaj Finance, where there's an excellent provisional numbers which has come through. The business is improving, going from good to better. Long-term growth is intact. Asset under management for Bajaj Finance has risen 33%. Deposit book is up by 39%, and the customer base is up as much as 21% year-on-year for Bajaj Finance. Well, the stock right now, which started on a negative note, has garnered some amount of traction, perhaps. But let's actually also talk about Updater Services, which is going to be debuting in on the exchanges on October 1st. The issue price has been fixed at 300 rupees per share. It's going to be perhaps listing in, or let's just say it is listing in at 10. Updater Service IPO, do remember the fact, received a very tepid response from the investor in all category as it has made available at higher valuation. Rest of the damage, apparently, according to analysts, is expected to take place due to the negative sentiments on the Lal Street. They've said that the listing price expectation is that could be around the upper price band of 300 per equity share. That's that when it comes to the new kid on the block. But what we also need to talk about is the slew of financials we need to address. After Bajaj Finance, let's go to IDFC First Bank, which is going to be raising in 3,000 crore via a QIP. Now, the issue will also have a green shoe option, and the QIP price is around 90 to 91 per share, which indicates a discount of 3% from Tuesday closing price. That's the news that we have, exclusive rather we have from CNBC Hours. To bear in mind the fact that IDFC First Bank, compared to Nifty 50 one-year run at 16%, IDFC First Bank has jumped in 97% in the same period, almost doubling investor wealth. The bank shares also outperformed the sector overall by 54.3% in the past year. let's actually take out some time to talk about HDFC Bank, which has revamped the whole top management after the mega merger which has come through. Essentially, the bank is seeking to propel its mortgages business 3 months after it acquired another lender. In terms of what they have, in terms of the top management changes right there up on the screen, where Arvind Kapil, the group head, will now spearhead the mortgage business. You have Arvind Vora, the group head, which will be moving as the group head of the retail assets business overall. In terms of other few names too, Smita Bhagat and Sampat Kumar will be the two new retail branch banking heads. That's the word. The group overall, there's this whole rejig which has taken place at the HDFC Bank, courtesy CNBC TV 18 reports. But this is the second reorganization since Shashidhar Jagdishan took over as the managing director and the chief executive officer in October 2020, succeeding Aditya Puri. HDFC Bank stocks, if you talk about that, has declined by over 9% in the past 3 weeks following the takeover at HDFC Limited. However, analysts consider the stock currently is trading at an attractive valuation as we speak. Adani Enterprises, another good one for you, where Abu Dhabi-based IDFC has raised its stake in Adani to over 5%. Talking about the strength of airports, data centers, green hydrogen, and various other verticals. Remember, IDFC stated that a part of portfolio rebalancing strategy, it will sell its 1.26% stake in Adani Green and 1.4% stake in Adani Energy Solutions. So a bit of momentum building up for Adani Enterprises on back of this development. GST notice served for Maruti Suzuki assessment order for FY20 amounting to a worth of 2,159 crore. The stock right now is surrendered to some amount of selling pressure to an extent of 1%. So at the moment, Maruti Suzuki says it's going to be not impacting the financials as it's going to be challenging the order. Bajaj Allianz General Insurance Company, another one which perhaps gets the demand notice from the GST intelligence, and this is to an extent of 1,010 crore during the period of July 2017 to March 2022. LIC, keep that on, another one on your list. It also has gotten a tax notice of around 84 crore from the Income Tax Authority. The notice has been received for the assessment year between 12, 13, 18, 19 and 19, 20. Essentially, that's the word coming in. Slew of news, slew of Q2 updates. But let's actually go across to Rajesh and check with him of what does he make out of something like perhaps Adani Enterprises if he is looking at the charts, what the charts indicating before we go to our fundamental guest.
So still weakness is there. Some buying action is happening, but still until the stock not crosses about 2460 level, there will not be any kind of reversal trade is going to take place. So if at all any pullback comes towards 2460, again, trader may take that level as a selling opportunity again, because as stock is trading below 20-day, 50-day moving average, looking at the overall setup, stock is almost trading below to its multiple support area, which is at around 2400. So 2400 is very key level to watch for the day. If it's again slips below to 2400 level, then possibly follow-up selling can be there. So range bound activity we can see for some couple of trading session, 2360 to 2470. Either side breakdown will decide the major direction for Adani Enterprise at this moment.
Market has slipped below that 19,400 mark. Would you want to give a new strategy right now? 19,392 levels.
So briefly, we have broken this 19,400 level. So maybe as already 10 minutes is already done for the market. And I think most of the unwinding trades are taking place now for 19,400 put writers. So I think some more pressure we can see follow-up selling towards 19,350. That could be the next level to watch for on the downside. But still, some of the stocks which are, holding the ground, like we have seen some buying action in Unilever, even from days ago, HDFC Bank is also now recovering. So I think these two stocks are looking very interesting at this moment. So one needs to closely watch activity in these two stocks, and if at all some pullback action comes further, so maybe some support buying action we can see in the Nifty also. So almost we are at the 19,400. So looking at the setup, there could be still chance of pullback because there is no decisive breakdown at this moment for 19,400. I'll wait another 5-10 minutes and then we will initiate. If we again breaks below 19,390 level, then we can open a short for 19,350. Very small target at this moment on the downside because market is already in the oversold trajectory. So there could be a chances of pullback action during the day.
All right, that's the word coming in. A bit of bearish sentiment continues. But Rajesh, thank you so much for taking out the time and speaking to us this morning.
Yeah.
Let's actually navigate our discussion more towards the fundamental side of the story. And to take the discussion forward, we're being joined by Jigar Mistry, co-founder at Buoyant Capital. Morning there.
Good morning, Nickey. Thank you as always for inviting me to your show.
Pleasure is all ours. Jigar, straight up, what's your assessment on the financials? A, HDFC Bank, where the top reshake has happened. B, Bajaj Finance, where perhaps the numbers still look interesting given the Q2 update. What are you liking within the large cap private sector banks or the financials for that matter? What are you looking at?
Right, Nickey. So I think, look at it from where we are approaching this, right? So the FII investments in India in the scenario where rates stay up for longer will essentially imply that they will have to withdraw some amount of money. And foreign institutional investors can only sell what they actually own, right? And if you look at the 10 largest ownership companies in India or 10 largest, most over-owned businesses, 6 of them are banks. So over the shorter term, the view clearly could be driven by flows, which means that foreigners will remain sellers. But, if you sort of look past the flows, then fundamentals for the banking system have never actually been better in at least the 20-23 years that I have tracked it and possibly forever. And in that scenario, the sector which otherwise in the rally has not really participated is something that we are extremely keen on. Private sector banks within that remains our focus areas, and clearly that is the place we are looking at as well. I think in this scenarios, we are using this opportunity to increase the exposure wherever we had little exposure, but clearly the way India has participated, the banks have not. So it's a great opportunity as far as we are concerned.
What also is surprising perhaps is how PSU banks have been doing, right? Perhaps more traction coming in for PSU banks as compared to private sector banks. A, how are the valuations stacking up for these PSU banks? Do you think they're in better shape as compared to a private sector bank? And if so, are there any particular bets that you like within the PSU space?
Right, Nickey. So you sort of break it down into 4 cycles that at least we prefer to see the banking system in, right? One is the credit growth cycle. The second is the NIM cycle. The third is the credit cost cycle. And the fourth is the valuation cycle. Now, in a scenario, post 2015, I think the entire sector has changed, wherein whatever credit losses had to happen have happened by 17-18. And after that, once the PSUs were recapitalized in whatever mean, shape, and form, once that is behind, then the credit growth cycle is essentially taking over very meaningfully. And so far, we have only seen, the retail/personal loans growing up. We have not really seen corporate capex run through in full steam. And in that scenario, I think private banks outscore PSUs. So clearly within the first cycle, we are a little better off with the privates. Secondly, NIM cycle tends to be different at different points in time. So if you are at the initial phase of the interest rate hikes, then PSU cycle tends to lag, as in NIM expansion tends to lag, and privates sort of go up much more in a hurry. And the exact opposite happens once the credit sort of rates stabilize. So possibly there PSU stack up a lot better. Third, the credit cost cycle is, I think, benign across the board, right? If you prefer not to look at it from a 10-year average perspective, then clearly you have a preference one over the other. But if credit cost is going to stay lower for longer, then clearly the focus then moves to the valuation cycle, where it's a slight difficult, we are having a slight difficulty answering that question exactly. PSUs, you leave sort of the largest PSU aside, then 1% ROE is par for the course, which implies they could do more or less like 13-14% ROE. And given the size, they might not grow as fast. So 1 times price to book for a vast majority of that sector looks reasonably okay. At the same time, privates at around 2.5 times, given stronger growth, given better credit cost management, looks reasonably okay as well. So depending on, where you have more comfort with, depending on the portfolio stance, given the scenario that we are in, sort of one can be ambivalent to, how things pan out. But if I am focused a lot more on credit growth, then I think privates might edge up sort of over PSU in the overall scheme of things.
All right, I'm just going to navigate the discussion from financials to something that is more relevant in recent terms, given the infra space, or just say the primary markets, where JSW Infra, perhaps listed with a bit of style, 20% uptick coming in on JSW Infra. And if you talk about today's trading session, the stock has added another 5%. How are you looking at this group company? How do you find the financials? Are you recommending that as a stock that one could perhaps lap up even at these levels? What kind of valuation you think is justified with this multiple? How are you looking at this?
Per se, Nickey, don't really know that business so very well, the stock that you mentioned. But see, in the infrastructure space is very interesting. So there have been many experiments that have been done so far. And I think now the code for how the national railways and the national highways will be built is more or less cracked. Right? You tried to do it with BOT and then EPC and then various other sort of intertwined methods. But I think none of that worked out. Companies either bid too low and couldn't deliver, or the government sort of funding really didn't come through. But now I think the central government has more or less decided that national highways will be built in this fashion and companies will sort of cooperate accordingly. That model, and if you look at all the 7 large verticals where a typical construction businesses plays around, then I think it's a reasonably decent space to be in now, given that clarity has emerged in a very large way. But at the same time, see, the valuations need to be taken into consideration. And at that juncture, one needs to take a call on which one makes more sense vis-a-vis the others. We have very limited presence in this space. Traditionally, we have owned businesses which have had BOOT or BOT or some or the other variation of road building and infrastructure capex. Today, we own just one company which is in the large EPC space. And therefore, JSW Infra per se, I don't really have a large call either which ways. We haven't really studied it that well. But the space is interesting, and if the valuations are decent, then I think it's a space one can look to build positions in.
Sure, perhaps you might want to consider JSW Infra given the kind of run-up that it has seen. But let's actually also talk about IT stocks. Accenture's modest guidance of around 2 to 5% for the 2024 fiscal year reflects perhaps the continued weakness in the discretionary spending that weighs on the earnings season of the IT sector overall. Anything that you like within the space right now? Are you going to be still exercising some amount of caution? And if you do like something from this space, between mid cap and the large caps, what do you like?
I think, again, see, you take a sort of slightly broader call. Then pre-COVID, the valuations are similar, but the operating environment is decidedly worse off. Correct? You very clearly have a scenario where people were guiding towards double-digit constant currency growth earlier. Today, hardly, if at all, anyone is in the high single digits, and even that is at risk if you look at most of the broking reports. So if that is the scenario, I would argue that the valuation needs to be a lot better for one to get positioned in, especially at the onset of what could possibly a very long period of elevated interest rates, in which scenario, if not for anything else, you just keep discounting a high duration cash flow stream. The valuations tends to be a lot lower vis-a-vis, say, falling interest rate expected earlier. We have sort of always, Nickey, been of the view that the speed at which the market believes the interest rates will be cut, unless recession happens, that's unlikely to be a scenario. And both those outcomes, right? A recession, in which case rate cuts, or no recession, in which case higher elevated scenarios, both don't really bode all that well for the IT businesses. We don't really own, or rather since 2021, haven't really owned very large cap IT names. Our exposure is a lot more through those niche plays in the ER&D space, in basically, like a payroll processing space. So those are the companies which are niche. low single digit multiples, growing at a reasonable pace, but carving out a niche of its own. Those are the ones that interest us. The large cap IT names, we are still not entirely convinced that we are out of the woods yet.
All right, a bit of weakness, perhaps bearish sentiment continues for IT stocks. But Jigar, thank you so much for taking out the time this morning and speaking to us.
Welcome. Thank you for inviting me as always, Nickey.
Pleasure. Well, a quick market update there. The market has now slipped. Actually, it's trading at 19,378 level, perhaps down and out by 3/4%. Clearly, the selling pressure is accentuated and by a multiple. That remains to be seen. So you can see the spill off of US equities, the turmoil that we saw essentially over global cues that is actually weighing down on the sentiment. But with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.